John Heffern, one stock you like over at Chartwell Investments is Steve Madden, ticker is SHOO. Stock's up around 14% so far this year. One would think that the devaluation of the yuan this summer would really help the shoemaker because a lot of their stuff is made over there. Why don't you tell me why you like it?
Yeah, I think Steve Madden actually, beyond issues pertaining to China, is one of our favorite stocks because we think there's a new sort of fashion refresher going on. And they sell, as you know, footwear to apparel and wholesale channels. And they do it from mass to luxury. And so if women and men are out there refreshing their closets spring and the fall, then they're probably going to at some point look down at their shoes. And Steve Madden will be there, whichever channel, whichever price point. And we think that's helping them in terms of the growth we see.
All right, another stock you like is Private Bancorp. It's also having a good year. It's up, I think, around 15% or so far this year. This is not your average bank, though. They deal mostly in the middle. So talk about what you like about Private Bancorp.
Yeah, correct. Private Bancorp's an interesting company, Chicago-based, run by a fellow who ran a much larger bank in Chicago that was ultimately acquired by an even larger bank as these things go. He's basically started up the band again, and he's brought his team together, and he's taking back that market share that he sold to that big bank. It's a common theme in the industry. We like the middle of the country. We like Chicago. It's a terrific banking market. He's got good growth in front of him, squeaky clean on the asset quality side, very strong capital. So I'm optimistic about the rest of the year. And as we think about 2016, particularly if interest rates start to rise, he's very well positioned.
And you're also bullish on Hilton. Now, this stock has really faltered this year. One would think it would do well with lower gas prices, more people out on the road, and a growing economy, more business travelers. So what's going to turn Hilton around?
Yeah, so two little sort of controversies probably now, or points of concern. One is just global growth. So you've seen in the last few weeks that, especially as the Fed wavered a little bit, we've had some concerns about global growth, and people think they're exposed to that. The second is a small China exposure. So the responses from our side are, first of all, terrifically managed company, very strong global brand, but interestingly, more of a US-centric company. 80% of their profit, or EBITDA, comes from the US, not so much from Europe, and even less from China. There are development opportunities in China, but those are down the road. And so we do see strength continuing in this lodging cycle of restrained supply and improved demand, and Hilton's right there to take advantage of all that. So in this market, we've actually added to it as people have become concerned and anxiety creates opportunity. We've just sat there and said, well, we'll take more of this because we think the outlook's pretty bright for Hilton. All
right, and then finally, you are a fan of Tractor Supply. Stock's up around 8% this year. I thought it would have more problems because the farmers crop prices have been depressed. That really hasn't helped farmers, but it seems as though people in rural areas are going to Tractor Supply. Why is that? Yeah, no disagreement there. One thing is we like the consumer generally. 13 million more jobs in the last few years. Not enough, but recovery. Wages sort of stagnant, but we're getting good job growth. That helps the consumer, and Tractor Supply is what I'd call a specialty retailer that should benefit from the consumer. It has that sort of agricultural angle, but it's more the hobby farmer, the large garden, the small ranch, but not the commercial agribusiness, if you will. And it's just a terrifically run company, and this very simple model. And that's been our approach this year, to stay in the middle of the fairway, not overcomplicate things. And where that works for Tractor Supply is high single-digit unit growth, low to mid single-digit comp store sales growth, and then on top of that, margin expansion. And so they've got great product, great operations, and they're still getting the traffic coming in the door. So stock's been doing well. And again, just another one we're optimistic about over the balance of the year. All right, well, thanks a lot, John.
Terrific. Thanks for your time.
And thank you for watching The Street.